Good evening, guys. A very warm good evening to everyone. So let's wait for a couple of more minutes so that we can be a good strength to start with, and then we will be starting with the exciting session. I am fine, PK. I am fine. Thank you. Thanks for asking, Badu. Good evening. Good evening, everyone. Good evening, everyone. DK, I won't be the best person to comment on that. You will have to raise a ticket about it. This is where we left off in the last class, right? Oh my God, is that the case? Don't panic. So RS is saying asking me for my number. I'm really sorry, but we are not allowed to share personal numbers. Otherwise, there are many policies related to the employment purpose, so I won't be able to share my personal number. But uh, if you raise the ticket, we can schedule a one-to-one meet. Make sure when you are raising the ticket, also guys, make sure when you guys are raising the ticket, mention the timing that you are available for, so that we can connect for a one-to-one session. Manish asked doubt. I have raised query. I am pretty much sure if it is about the curriculum you have received, you might have received some response, Manish. I have sent the response to everyone. How many lectures are left for batch 0424? Approximately 2 months of content more. Yes, you created a ticket and I guess you have received a reply about it. We scheduled a meet as well, but I guess you didn't join it and neither you replied it, or maybe the time was passed when you saw the ticket, you saw the reply to the ticket RS. So that's why we missed. No worries. We will raise the ticket. We will have a session by Monday or Tuesday. I am on a week off, so we will be having raise everyone who wants to have a one-to-one session, please do raise the ticket and we will connect after Tuesday. Since I am having a week off on Tuesday, I am taking a break on Tuesday. After Tuesday, we could connect or we could connect by Monday as well. If the slots are available, I'll have to check. Otherwise, we can connect by Wednesday. After Tuesday, that is Wednesday. Within this week, all your no NS, I responded to your ticket. Even I scheduled a session today morning as well, but you didn't join the session NS. Yes, RS. So please do raise a ticket and we will be connecting. We will be solving all your doubts, those who are having one-to-one doubts by this week itself. Before next class on next week, we will be solving all the doubts. Who are having doubts can request for a one-to-one session. But just make sure after Tuesday, that is on Wednesday, when you are available, except 2 to 4, because we have mock interviews. I have mock interviews scheduled on 2 to 4. For the rest of the week, Wednesday, Thursday, Friday, Saturday, I will be available. AM, which batch are you from? What is your batch number exactly? Okay, someone wants the sheet. Let me share. Let me share the sheet and then we will start without wasting any time. Good afternoon, GA. Good afternoon. Yes, AV 02. I am from second Feb. Is this the last session? Yes, AV. This is the last session for you. And from tomorrow for us. For those uh, for those who are going to complete the session now, you will get at least 10 to 15, 20 days for preparing for your exams. So make sure that you prepare for your objective and subjective exams. Also, yes, that is very important thing. I'll come to that, RS. Just give me a second. Just give me a second. Let me share the screen first and then I'll come to your point. In NS, that is not something which is in my hands. So I'm really sorry about it. What the exams, there will be mock sessions, right? Yeah, after exams, there will be mock sessions, mock interview sessions that probably I'm going to take for you. But let me complete one important thing, guys. When you are raising the ticket, few things, few things I want to be very clear about. Thursday and Friday, I have week off. When is the exam? The schedule will be mailed to you. You will be receiving the schedule on mail. Exam will be subjective and objective, both 6 subjective papers and 6 objective papers. You will be this PDF of the PDF materials will be uploaded on LMS for the exams that will be conducted. Any response till now? When can I expect SK? I'll tell you. I am coming to that point. Those who might have raised tickets after Wednesday, that is on Thursday or Friday. On Thursday and Friday, I have week off because on Saturday and Sundays, I take lectures. So on Thursday and Friday, I have week offs. This is first thing. Saturday and Sundays, basically, my lectures are there. My mock interviews are scheduled. So the schedule is pretty much tight on Saturdays and Sundays. It will be uploaded on LMS AV. It will be uploaded on LMS. Let me just please complete, guys. Please complete. Please try to understand my schedule. So this would be best for you on what time slots you can expect from. Okay. Monday, Tuesday, Wednesday, 50% is passing AM. Okay. Let me just complete this. Yes, mock interviews are taken by you. Earlier, Shilpi ma'am used to take. If Shilpi ma'am is available, she will take, all else I will take. Okay, where was I? I was saying something. What was I saying? Yeah, about tickets. So again, Arjun, study material will be uploaded on LMS within next 2 3 days. Okay. Yeah. What was I saying? Yeah. So on Monday, Tuesday, Wednesday, uh, they generally mock interview sessions are conducted. Some of you are saying that it has been you guys had raised ticket yesterday and still not received. Probably because on Fridays I am on week off. On Thursdays I am on week off, and on Saturdays and Sundays we have sessions here. So the best time for the mock interviews for the doubt solving sessions are Monday, Tuesday, Wednesday. But for this week I have uh, uh, a special function to attend or something. That's why I am shifting my week off to Tuesday. So the sessions slots available to you is that is Monday and Tuesday. So session slot available for this week is Wednesday, Thursday, and Friday. What should be the timing? My timings are from 1 p.m. My official timings are from 1 p.m. to 10 p.m. Okay, 1 p.m. to 10 p.m. is my official timing. Out of that, 2 to 4 is the time for mock interviews. So don't schedule sessions between 2 to 4. You can mention your time while raising the ticket. Which time are you comfortable with for requesting a session? The best time would be between 6 to 9 from Wednesday to Friday this week. From Wednesday to Friday, try to raise a session ticket for 6 to 9, and I will send you a link. And make sure when you mention the timing of your choice, make sure that you join. Many of the students, what they do is they schedule the session. I give them the timings and they don't join the session. And then they comment that they were not available or something. So please don't do that, guys. Please trust me. My time is as important as it is as yours. So please do be punctual about the timings as well. But preparing financial model, all the data, all the financial models in relative valuation, in DCF valuation, we have made right from scratch. Yes, Aris, I got your point. That is something which is, but you need to have need to check your mails. I guess you might be getting notifications on your mails. So please do check it. It might have been delivered in your spam box, Aris. So that may also be a reason. So make sure you check your spam box as well. That you might have received you might get a mail something like response on ticket received or something like that. If that is the case, so when we will schedule a meet, you yourselves tell me then when you are available, RS, and at that point of time between Wednesday to Friday this week, we will connect and we will connect for sure. And I'll try to resolve all your doubts. Okay. Now, when will be the resume building sessions held? Probably after your exams, Arjun. Probably after your exams, you will be having your resume building sessions. That is taken by a resume. As far as I know, it is taken by a resume building expert or a LinkedIn optimization expert, and he figures out. Pratik sir, I guess, is the name, and he takes care of all those things. Uh, Mostly practical modeling, you will have a project for that. For exams, you will have objective and subjective papers. For objective papers, you will have four options. MCQs. There would be objective papers for six subjects. For the same six subjects, you will be having subjective papers as well. And the detailed schedule will be mailed to you by the backend team. Okay. Now, first things first. This is the year. This is the year when Adani Enterprises acquired NDT. This is the year when Adani Enterprises acquired NDT. Based on a normal forecast, we will be, based on some hypothetical assumption, we will be making the projected income statement for NDTV for the next 5 years. We will be making projected income statement for NDTV for the next 5 years. So shall we start with the modeling, guys? If all your doubts are clear now. Shall we start with the curriculum part? Okay, let's start. Few things we need to complete for the model, and then we will go for the how we got EV, that is enterprise value. Sure. Just give me a second. Let me connect the pen tab. Only then I'll be able to explain. So here we are. I have received a doubt from SK. Yes, the multiple based valuation approach, that is relative valuation approach. Correct. Now, how is EV calculated? This is what PT is asking us. Sorry, SK is asking us that how is EV calculated? I have been given a multiple of EV to EBITDA. Let's actually, in true sense, you will have to take the median multiple of the industry. Since we have learned how we calculate the median multiple from relative valuation approach, we are just taking a hypothetical example over here that EV to EBITDA multiple for the industry is, let's say, 5 times. If EV to EBITDA is multiplied by EBITDA, what I am left with? if EV to EBITDA is multiplied by EBITDA SK, what I am left with? If EBITDA gets cancelled out, EV, right? That is how we calculated EV. You can see it over here. This is how we calculated EV to EBITDA multiplied by EBITDA. Okay, SK, are you comfortable? Anyone else who has any doubt regarding this still here in the model? Please let me know. Okay, I am explaining again. EV to EBITDA multiplied by EBITDA PM, what would that be? A by X multiplied by X, EV, right? So if I want to calculate EV, I have a EBITDA multiple. I have my EV to EBITDA with me, that is 5 times. I have my EBITDA with me. So don't you think when I multiply my EV to EBITDA with EBITDA, I will be left with EV, and that is what I want? Are you getting this, PM? I think PM, I have a session with you tomorrow, right? At 10:15. Yes. EBITDA multiple here, it is assumed hypothetically. Ideally, you should have taken it as a median multiple from screener. Okay. Here, since this is a hypothetical model based on hypothetical data, to make things easy, we have assumed it to be from our own choice. Now, NB is asking me to repeat again. NB, what is EV to EBITDA multiplied by EBITDA? What is EV to EBITDA multiplied by EBITDA? Students over here is asking how did we came with EV. I wanted to come with EV. I had my EV to EBITDA multiple with me. So when I multiplied EV divided by EBITDA multiplied by EBITDA gets cancelled, and I am left with EV, that is enterprise value. And that is how I came up with enterprise value part. NB, are you comfortable with this till here? Okay. Now this is year 0. Control 1. I want to change this to year. I want to change this to years. So I'll go to custom general 0 bracket open year dash 0 bracket double inverted comma close. Okay. And this is year 0. Now you might be wondering, guys, that sir, why are you going to the format painter and then changing the format? You could have simply written this as year 0, right? What is the difference between these two things? What is the difference between these two things? If I do is equals to +1, here it won't work. Why here it won't work? Because Excel is considering this as a word. Excel is considering this as a word. But over here, as you can see, Excel is considering as a number 0. So that's why I will be adding over here for the next 5 years. I will be copying the format, Control C, Alt TST, Alt TST, Alt TST, Alt TST, Alt TST. Next thing, this is my forecasted period. So Alt H, H. This is the data format. Forecasted period. I will have to check if there's something over here. Okay. Similar to, since this is year 0, this is year 0 as well. Next, let me add borders. Now, next, last thing, all these columns. Okay. Now, let's assume revenue has grown up by 10%, and this 10%, it will grow year on year for next 5 years. How will I get revenue for the next year? Which part do you want me to repeat, NS? Naveen, which part do you want me to repeat? Shortcut for column width. Okay, okay. Okay, year part as well and shortcut for column width. So, as I said, you will have to make your own shortcuts from here onwards. Alt H when you select, how do we navigate? Basically, there is nothing called as shortcut in Excel. We are just navigating it through keyboards. Okay, we are just navigating it through keyboards. There is nothing called as shortcuts in Excel. So you are selecting this data, Control Shift, right arrow, Control Shift, down arrow. When you are pressing Alt, all these options are getting opened. See, now what I want to do, I want to adjust the column size. So I will go to home. I will go to format, that is O. Then for column width, W is the option. So I'll go to column width. 12 is the number I'll put and I'll click on OK. And yes, I'll be done with it. Okay. Next, space the sheet. Space the sheet. I'm sorry. What do you mean by space the sheet? And this year part, I'll tell you again. 0 is what I have entered. 0 is what I have entered over here. I want to change it to year 0. So I will press Control 1, go to numbers, custom, general, and over here, I will put year, bracket open. Why bracket open? Because if I want Excel to understand that this is a word, I will have to open double. This is not bracket, actually double inverted commas. So I'll open the double inverted commas. I'll write year over here, dash, space, bracket close, enter. Once I have done that, is equals to last year plus 1 would be year 1. And till 5th year, I'll do this. Next, 10% is my revenue growth rate. So is equals to last year into what shall I do from here onwards if I want to get the next year revenue? Guys, what shall I do from here onwards if I want to get the next year revenue? Please reply. We have already did this. 1 plus 10%. Very good. Next, we have assumed COGS to be 20%. Ideally, this is not the best way to do it. We should have done it like writing 20% over here. Same goes for this as well. It's like 2025, 26. If we write like 2024, how we increase like 2025, 26? I'll tell you how. Okay, 10, this time it's 10%. So we will take into less COGS. COGS it is taken off. That year, gross profit. Okay, okay, fine. Okay, so someone is asking, SK is asking that let's suppose you have 2025 over here. You have 2025. If you just want to keep it 25, you can simply do +1 and drag it. Okay. But if you want to take it year 2025, then the process is again same. Control 1, go to custom, go to 0 over here and add year in double inverted commas. bracket, sorry, double inverted commas open, year dash, okay. And you could drag this is equals to last year plus one. Okay. Are you comfortable now? Escape. Alt H M C. This is my forecasted years. This is my forecasted years. Next, from where 10% is coming, we are assuming it. These are assumptions. This is going to be a plug and play model. So we will be changing or tweaking the values and the whole model is going to change. We are going to play with this model. You will understand that. Let me just complete the model first. Is equals to this into 20%. Similarly, I am going to drag this formula, Control C, Alt TSF. What is the formula for gross profit? Revenue minus COGS. Here it is. Okay. What is this as a percentage of this? 5%. So we will be taking 5% over here as well. Because as revenue is increasing, we are assuming income to increase as well. Expenses to increase as well. Correct? This is going to be same as last. What are we here for? EBITDA. Depreciation and amortization. 10% is equals to this divided by this. I guess again it is 5% only. We use Excel in industry or we are going to use. Mostly Excel is widely used and mostly used spreadsheet software. Although there is something called as LibreOffice as well, which is used in some cases, but in most of the cases, Excel is the ideal thing to go for, ideal software to go for. And if you are selected for a financial modeling kind of a role or a financial analyst kind of a role with financial modeling as a KRA, key responsibility, then in that case, your whole day will be spent in front of the Excel screen. And trust me, you could find it a bit boring. Less interest expenses. Interest expenses 10% of debt. Let's assume interest expense to be constant. We are not going to increase debt. Earning before tax. This minus this. Finally, tax expense. This multiplied by tax rate. Now, this forecasted income statement is what we have projected it to be and also called as pro forma income statement. Pro forma income statement is equals to this divided by this. Now, we are done with let me add a column over here as well. Okay. Next. Now, here we considered that this is going to be a cash acquisition. Here, what we considered that this is going to be a cash acquisition. Sometimes what happens, Let's suppose that you have a company, boat. I am the founder of JBL. Or you have a company Skull Candy. I am the founder of boat. I want to acquire your company. You as a founder and as well as the key member of Skull Candy, you have a lot of expertise that you have gained through your experience over these years. But you are also a potential competitor to me. So I want to acquire you, but I also want to use your expertise in my business. So what I can do is I can acquire you for share acquisition. What do I mean by this? Let's suppose both acquire Skull Candy, or in our example, Adani acquired NDTV. When Adani acquired NDTV, Adani is not in the business of media houses. Adani will need promoters of NDTV. Adani will need promoters of NDTV to run their media house. Adani can need it, right? Or Adani can hire from someone else as well. But let's say Adani wants to keep promoters of NDTV as it is so that they can run their business house. So and Adani doesn't have cash to acquire it. So what Adani can do is Adani can say that sell all your stakes, merge with us. Adani will absorb all the assets and liabilities of NDTV. And in return, founders of NDTV ask, what will I get? Adani says, I won't pay you cash. Then what will I get? You will get the shares of the consolidated entity. You will get shares of the consolidated entity. Are you getting this, guys? That is called share-based acquisition. This is something called as share-based acquisition. Here, till now, we discussed cash settlement for acquisition, but quite often in the industry, share settlement for acquisition is something which is also adapted. Here I am writing cash settlement. Now, guys, any doubt till here, please stop me here itself. If not, I'll move forward. We will also need to come up with schedules as well for each and every part. Alt H MC. I am just taking care of the formatting part. Shall we start? Okay. Now, first of all, what Adani can do is it can come up with an open offer. You, me, and everyone have shares of NDTV. Let's suppose the current share price of NDTV is 300 rupees. Adani will come up with an open offer and say that those who will sell NDTV shares to me, I will buy it for 400 for a premium. Why? Because Adani wants to acquire NDTV. Adani wants to get majority stakes in NDTV. Obviously, if something worth 300, someone is offering me that 400 rupees for the same thing, I will sell it to them. So let's see what happens in case of acquisition through share settlement. Let's say for the simplicity of calculation, we say that the acquisition price or the acquisition value for which Adani valued one single share of NDTV is worth 1000 rupees. 1000 rupees per share. This is what Adani valued NDTV shares for. Now, if equity value is 1 crore 47 lakhs or 14.7 millions, if this is the equity value, the value which is in front of you, it's 1 crore 47 lakhs or 14.7 millions. And one share is worth 1000 rupees. Please try to understand. Total worth of share is, I have to pay you 1 crore 47 lakh rupees. I have to pay you 1 crore 47 lakh rupees. And let's suppose you have outstanding shares. Now also, how will I get the outstanding shares that Adani has? For that, I will have to assume the face value of shares. Face value of share, let's say 10 rupees. Number of shares would be number of shares for Adani Group would be equity share capital divided by face value. This would be the number of outstanding shares for Adani Group. Similarly, for NDTV also, I have some number of shares. If equity value is worth 1.47 million, if equity value is worth 1.47 million and total there is 1 lakh shares, what is the value per share? What is the value per share? Can I say this divided by number of shares? 147 rupees is the value for per share for NDTV. Now, if my shares, the shares of market price of Adani shares are worth 1000 rupees per share. Market price of Adani shares are worth 1000 rupees per share. Can anyone tell me how much shares do I need to give to the shareholders of NDTV so that I can pay off this part in debt, or sorry, in shares? Guys, are you trying to understand what I'm saying over here? If I want to give shares worth rupees 1.47 million, what are the total shares that I should issue to the promoters of NDTV? What are the total shares of Adani I should issue to the promoters of NDTV? Should I give him 1 lakh shares for exchange of 1 lakh NDTV shares? Guys, should I give him 1 lakh shares for exchange of 1 lakh NDTV shares? Will that make sense? Please think about it. If not, what should be the value? If not, what should be the value? Basically, I am asking is what should be the exchange ratio? What should be the exchange ratio? It means that if I am giving you shares in return of your NDTV shares, for how many shares of NDTV should I give 1 share of Adani? For how many shares of NDTV shall I give 1 share of Adani? One share of Adani is equals to how many shares of NDTV? Think about it. GA is here with an answer. Very good, GA. And it seems that his answer is correct. Everyone else also think about it. Take your time. Take a couple of minutes. I won't disturb you. Yes, SK, but I am asking about the exchange ratio. You are very close to the answer, but not to the exact answer. You are giving answer for number of share I will issue. Number of share Adani will issue. What is the, no Naveen, what should be the exchange ratio? It means that if I'm giving you one share of Adani Group, what are the shares that I want from you of NDTV? Yes, Shatrughan. Even SK and GA. These two guys are here with the correct answer. I want every one of you to practice this. Let me take a sip of water. I'll come back in next minute, in next 1 minute. But make sure 1:10. No, we can't assume that figure. That figure need to be calculated. No PM, you're incorrect. Let me take a sip of water. I'll be right back till by then. Those who have not figured it out, please try to figure it out. No more responses yet. Please, guys, do practice. Please, try at least. You may be wrong, you may be right. Yes, RS, you are correct. The number of shares that need to be issued is what RS is saying. But what should be the exchange ratio? Close, SK, very close. First of all, let's try to figure out that what are the number of shares that Adani will have to issue. One share of Adani is worth 1,000 rupees. One share of Adani is worth 1,000 rupees. Adani wants to Adani wants to offer worth 1.47 million of shares. It's not 1.47 million shares. It's worth for 1.47 million of shares. It means that this amount is in rupees. This is not number of shares. So this is what the equity value Adani wants to offer. Let's suppose, let's suppose that this is 147 lakhs. This is 147 lakhs and one share is worth 1,000 rupees. How many shares I need to give to NDTV? How many shares does Adani Group need to offer to NDTV to fund this 147 lakh rupees or 14.7 million rupees? Can I write new shares need to be issued equals to the equity value of acquisition divided by current market price of shares? Can I say that it's 14,700 shares? But when Adani gives 14,700 shares, let's suppose this 1 lakh shares that NDTV has, will it be with one shareholder or many shareholders since NDTV was a listed company? and still is, I guess. Not guess, but yeah, NDTV is still a listed company. What I'm asking is this 1 lakh shares of NDTV with one particular shareholder or many shareholders in the market? There are many shareholders in the market. So if you want to be, let's suppose you were an NDTV shareholder, and if you want to be eligible to get Adani shares, how many number of shares you should have? Let's suppose you had 100 shares. Let's suppose that you had 100 shares of NDTV group, NDTV India. Let's suppose that you had 100 shares of NDTV India. In that case, how many shares of Adani group are you entitled for? This is my question. How, if you have 100 shares of NDTV India, how many shares of Adani group are you entitled for? Now the question is very basic. If 1 lakh shareholders are entitled for 14,700 shares, how many shares will 100 shareholders will be entitled for? And how many shares will Adani absorb in return of one single share? So basically what I'm asking you is exchange ratio. Exchange ratio. Not 14.7. Maybe yes. Close, not exactly, but close. But the calculation is mistaken. It is number of share by Adani, but number of share of NDTV divided by number of new shares issued. It's 6.80. What is the interpretation of this 6.80? For every 6.80 shares that Rohit gives to Adani Group, he will get one single share of Adani Group. It means that one share of Adani, it means that one share of Adani is is equals to 6.80 shares of NDTV. 6.80 shares of NDTV. One, again, what I mean, one share of Adani is equals to 6.80 shares of NDTV. What I mean by that, for the amount for which you will buy one share of Adani, for the same amount, you can buy 6.8 shares of NDTV. Shall we prove this? Divided by, see, the answer would be same. For the amount for which you will buy one share of Adani Group, for the same amount, you can buy one 6.80 share of NDTV Group. That is the exchange ratio. Guys, have you understood this part? Everyone, everyone, have you understood this? Perfect. Next thing. Now, generally, when such kind of acquisition happens, the purpose of the acquisition, although in this case, I should not comment on this, but this was a political acquisition. Generally, when people acquire a target from a different industry, the purpose of the acquisition is to turn around the company and sell it at a better multiple in coming future. Did we discuss this? This was the objective of leverage buyout. This was the objective of leverage buyout, if you remember. Guys, do you remember the whole process of leverage buyout? Now, similarly, over here, what Adani will do, Adani will transform NDTV into a profitable business, and then he will sell it to a neutral third party or a competitor of NDTV or to a different business house which is interested in investing in NDTV. This is what Adani will do. So for that, what is the return that Adani has generated over this period of 5 years? So what we are assuming over here, for 5 years, Adani managed NDTV, turned it around to be a more profitable business, increased its profit margins, and transformed the company into a more valuable business. Once the business is more valuable, what Adani is planning? Adani is planning to sell the company to a neutral third party or a strategic competitor of NDTV. Now, let's suppose Adani purchased it for EV to EBITDA multiple of 5 times. Will Adani sell it at a multiple of 5 times or greater? Will Adani sell it at a multiple of 5 times or greater? Why greater? And if at the same multiple, why at the same multiple? If at a lower multiple, why at a lower multiple? Think about it. Correct. Higher multiple to get profit from selling shares, which is the main objective of LBO. But the question is, who knows? Who knows that this LBO will be profitable only? Can't a business deal be loss making? Can't a business deal be loss making, guys? So at what multiple Adani is going to sell NDTV will be dependent on how well Adani is able to transform NDTV, how well Adani was able to turn around NDTV. If Adani is able to make NDTV operationally more efficient, he will get a higher multiple for it. If under the Adani group, NDTV has performed worse than its historical, then in that case, Adani won't even get the 5 times multiple for NDTV. Considering an optimistic scenario, what we can do is, let's assume that Adani sells NDTV for 10 times multiple. In that case, give me the enterprise value, guys, and finally the equity value as well. Give me the enterprise value and finally the equity value as well. Also give me the value per share. Okay. Received one response saying EV is 28 lakhs. Okay. Very good. Think about it again, PJ. What is the possible mistake that you guys can make? Very true, GA. Correct. I wondered why you took so much time to get it clicked. I have got two responses, one from PG, one from GA, one of which is right. I am waiting for more responses before disclosing the value from my end. NS, Nikhil, please do try this. Please give me what value could one expect? What would be the enterprise value after 5 years? Guys, what is happening? Are you guys trying? How many of you are trying? And if not, please allow me to move ahead. Yes, PG, you are correct. Again, PG is here with a reply, and this time both G and PG are here with the correct response. I'm not getting why any of you are not trying, or if you are trying, you are shy about answering. I don't know what is happening. Only two people. EV to EBITDA multiplied by EBITDA. Debt. Let's assume debt has not been changed. Cash. We will have to make forecasted balance sheet, but let's say cash levels are also being same for now. Enterprise value minus debt plus cash gives us the equity value. The value per share would be this divided by purchased it for 147, sold it for 380. Return, let's calculate. Invested amount was, let's say purchase price was, return multiple at exit would be, and this value should be in times. So the return multiple is 2.59 times. Now, next thing is, let's suppose Adani is able to grow the company's revenue at 15% for all the years. At that point, what would be the return multiple? It would be 3.35 times. So this, since we have linked this model, this has become a plug and play model. Let's suppose Adani is not able to get 10 times returns on this. 10 times at 10 times multiple, no one is buying the company after 5 years. So what could be the return multiple if it is valued at 4 times multiple? So then Adani is making 1.06 times of what he has invested. Now we are done with most of the part of the model, but ideally in professional terms, few things we have calculated like over here, like as you can see, debt. Ideally, this debt shouldn't have been calculated like this. We should have made the schedule for that. That is called debt schedule. And for all the line items that we have calculated directly on the balance sheet, we would have made schedule for it, which had beginning period, Adani debt, beginning period debt of acquirer, beginning period debt of target, debt taken for acquisition, ending period debt. Beginning period debt for acquirer, Adani's debt, this value, beginning period debt of target, this value, debt taken for acquisition purpose, and finally, adding all these three, we would have we have got ending period debt. Ideally, there should also be less debt repaid, less debt repaid. we would add these few values. Debt repaid would be 0. And yes, this is done. Also make sure that you link for this part as well. Next, similarly, you should have made this for inventories, receivable, cash, goodwill. We will go with the cash part. Goodwill we have already made. Let's go for the cash part. For if we miss due to time constraint, if we miss any of the schedules, you will have to make those schedules on your own. But we will try to complete the major ones, that is cash and also the shares. Cash schedule for Adani, NDTV cash, debt taken for acquisition, sorry, cash paid for acquisition. Here it would be cash less cash paid for acquisition. It would be this value. And with this, we don't need to adjust for this. Is equals to this plus, yes, yes, that I am doing. I remember that. Beginning period, cash of the acquirer, beginning period, cash of the target. Okay. And finally, Toshi, is it so? No, acquire has a higher value and target has a lower value. I guess, no, no, no. Yes, maybe, correct. We have taken consolidated cash value over here. Target. This is the cash value that we should have taken ideally. And what we have taken above should match this value. Debt 16,895. Debt repaid, debt taken for acquisition 16,895. Just a second, we have made some mistakes. Ideally, debt taken for acquisitions should be this value, right? You guys also don't tell me where I went wrong. Now it's 16,895 over here as well, 16,895 over here as well. Instead of calculating from there, it should ideally be coming from the schedule. Now cash over here is 9895, 9895. Yes. Finally, the last part, statement of changes in equity, SOSI, is the debt value will differ, right? Yes. In case of share settlement, there won't be any debt. Since we are settling 100% in shares, there won't be any debt. If we would have a blend of debt and shares, then the things might have been different. But since we have assumed 100% is share-based acquisition, these are basically two different cases here. We can't mix both of them. So if you have paid cash, we could have paid 50% through cash and debt and the rest 50%. Yes, in that case, that would be the beginning period debt for both of the companies. But this, yes, this is also something which you highlighted very correctly. Debt schedule based on, this is based on cash acquisition. This is based on cash acquisition. Very good. And for share acquisition, we will be making share schedule. Not only you, but to everyone, I'll share the sheet. Share schedule, basically statement of changes in equity. So this is what called as also share schedule, share settle for share settlement. Beginning period, shares. We don't not target shares since target shares have been absorbed. Shift sales up, uh, add new shares issued, less. Any idea what would be less? Shares repurchased, ending period, number of shares. Beginning period shares of acquirer was this value. Number of shares issued for acquisition is need to be issued this value less shares repurchased, 0 for now. And yes, we are done with this. Okay. So here we have completed this. You can take care of the formatting part from your own end. One important thing, we will be starting with the some of the discussion, theoretical discussion on merger and acquisition. But you guys, do you need break? A 5 minutes break? The sheet has been shared in the chat box. Have you guys been exhausted? Do you need break or shall we continue? Shares repurchased. Sometimes what company feels is that their own shares is undervalued in the market. In that case, they go for shares repurchased. Let's suppose Tata TCS shares are trading for 3,000 rupees and TCS wants to give some. This is just basically a corporate action which seems to the overall market that company is confident about their own business. So let's suppose TCS has 50 million in surplus cash. They don't have any avenue for investment and they feel the best place to invest this money is my own company. In that case, the management of TCS will initiate a share repurchase at a price premium to the current market price. Three chances, Manish. Yes, I'll share the sheet again. Guys, go for the 5 minutes break and be right back. Be right back in next 5 minutes. We will be starting with the theory part of mergers and acquisition. Yes, TG. Yes, TD, you are correct. Yes, for 0224, this would be the last pass. For that PP, you will receive a mail, detailed mail about the schedule of the exams. Yes, TD. Keyboard anymore. Let me connect the pen tab. Yes, you can raise tickets to ask the doubt section. Okay. Is everyone back? Shall we start? Guys, are you back? Shall we start? Yes, Manish, the notes will be uploaded on the LMS. Okay, let's start. Few basic things that you will reply me. What is it? Based on what we have discussed till now. Since it is the part of the curriculum, I'll have to discuss this. Difference between merger and acquisition. Tell me, what is the difference between merger and acquisition? TD is saying one company ceases to exist, whether it ceases to exist in merger or in acquisition. Merger is of two companies and acquisition is of merge is to join. Okay. Acquiring, that is taking ownership hold. Okay. Merge is to collaborate. Okay. Collaborate, combine, two separate entities combined and create a new joint organization. Merge is to form a bigger entity. Okay. Acquisition refers to takeover of one entity by another. Very good. In a merger, the both entities in which type of business combination are you getting a feeling of equality? Whether the equality persists in merger or whether equality will persist in acquisition. In merger, right? Two companies come together. It's not about equality in ownership terms. The if two company merge, one promoter group might hold 60%, one promoter group might hold 40%. Like in case of Vodafone Idea, both Vodafone and Idea does not hold equal ownership in Vodafone Idea. Vodafone holds higher, I guess. I'm not very sure, but I guess Vodafone has a higher stakes in Vodafone Idea. And during the time of the merger, they were there was an agreement. If Idea performs well in future, what Idea will do? Idea has a right to increase their stakes in VI. It was given 3 to 4 year time. Okay, so Singa is saying yes, Vodafone has a major stake. That's why the V in VI comes first. Okay, I didn't know. Thanks for the information though. In acquisition, there is a parent subsidiary relationship. There is a parent subsidiary relationship. Basically, one company is the controlling house of other. One company controls other. That is what makes an acquisition different from merger. Now, few basic terms. Acquirer. Who is the acquirer? One who acquires. Who is the target? Also called as acquiree. One who gets acquired. Now, there is something also called as consolidation, where two firms will come together and make a third firm, a new firm. That is consolidation. Let's suppose a fridge making company comes together with a cooler making company and make a third company which serves ACs, that is consolidation. Basically, both absorbs each other equities and liabilities. There is something called as horizontal merger. In my childhood, I used to get very much confused with these horizontal and vertical. What is horizontal and what is vertical? I am writing options. This is question 1. This is question 2. What is horizontal and what is vertical? A is horizontal and question 1A, very good. Question B, vertical. How I encountered this challenge is I always remember we have a vertebral column, which is a straight spinal cord. And that's why vertical is always straight. Now, how it is related to merger and acquisition? In a supply chain, if you are acquiring someone up the order or down the order, it is a vertical merger or vertical acquisition. If you are merging with someone up the supply chain or down the supply chain, it is a vertical acquisition. For example, there was a paper manufacturing company. There was a wood manufacturer, sorry, wood producer. There was a binding company. And then when this paper, let's say this is a paper distributor, and then there is paper manufacturer. This is the supply chain. Producer gives raw material to the manufacturers. Manufacturer collect raw materials, make finished products, send it to distributor. Distributor sell it to shopkeepers. This is the supply chain. Shopkeepers give it to the end customers. If businesses go up or down the order for acquisition, it is called vertical. In case of horizontal merger, very true GA, the competitors or participants in the same market will merge with each other. That is horizontal merger. Like acquiring your competitor, Skull Candy acquiring Boat. That is horizontal. This is vertical. Vertical in the order of supply chain. All these participants, all the paper manufacturers will be in the same line of supply chain in the horizontal line. And if they are combining with each other, that would be a horizontal merger. Next, have you heard about the word conglomerate? What is conglomerate? Conglomerate is nothing but a business house. Correct. Business house operating in multiple lines of businesses. Yes, a business house working in multiple lines of businesses like Reliance. Reliance has an oil company. It is into retail. It is into telecom. What lines of businesses does ITC have? The only one I am aware of is, I guess, tobacco manufacturing. Okay, ITC is also into hotels, right? FMCG, I guess, as well. Okay. Retail, telecom. Reliance is also into fashion. e-commerce. So one conglomerate merger is when one conglomerate merges with other. It is also into finance, yes, geofinancials, although a separate entity now, but still belongs to the same business house. Now the question is, why would A combine with B instead of working independently? What could be the possible motivations, very good, behind mergers and acquisitions? One would be, since all of you are saying the name synergy, what is synergy? The extra energy which is produced by the combination of two entities is synergy. Example, A used to do, and this is not my example, actually, I heard this example from our honorable Prime Minister, that if A is doing A square of work and B is doing B square of work, he said this in reference of America and Bharat. If A is doing A square of work and B is doing B square of work, together A and B will do A plus B the whole square of work, which would give an output of A square plus B square plus 2AB. What is extra over here? Individually A was producing A square, individually B was producing B square. The extra unit of output that A and B came together and produced is 2AB. This is nothing but synergy. This is synergy. Now there could be two types of synergy. One could be cost synergy, one could be revenue synergy. It means that, let's suppose individually, if Vodafone had 1000 active customers and Idea had 1500 active customers, when they run a marketing campaign together, they are able to add more customers than they would have added individually. That is revenue synergy. What is cost synergy? Idea had its own office, Vodafone had his own office. Ideas have a different set of board and executives. They have regional level managers, employees, infrastructure, networks, and all the expense sources. Same was the case with Vodafone. Now, would a company need two CEOs, two CFOs, two CMOs, two regional level employees, two managers for every single task? Will the company need two people for every single position, every single task? No, right? In that case, company would be saving on rent expense, utility expenses, salary expenses, even marketing expenses. So this saving of cost would result in cost synergy. Apart from synergy, Yes, also diversification and taxation advantages. Diversification in terms of boards. If there is a conglomerate merger, diversification in terms of business operations as well. Next, what could be the motivations other than synergies? Ambition for rapid growth. If I am growing individually at 10% year on year, and you are growing at 5% year on year, probably we could come together. Probably we can come together and grow at 18% year on year. Again, a part of synergy, but together we could grow more rapidly. Also, we would have an increased market power, increased market share. We could, when we come together, we could be a dominant player in the market. We can share each other's unique capabilities. We can share each other's unique capabilities. As someone said earlier, also diversification benefits are associated with the business. And finally, competitive advantage. Since you carry your own set of expertise, I carry my own set of expertise. Together, we would be able to fight the market better. Right? Now, when it comes to merger, both merger and acquisition is a form of business combination. We will consider, while understanding the strategies of merger and acquisition, we will consider merger as the representative of business combination. You can apply it in your mind for acquisition as well. Before starting with this, how many of you are interested in playing chess? How many of you play chess, or at least inquisitive about it, curious about it? Only two? Okay. NS says he plays, GA says he plays, Arjun says he plays, PP says he plays. Perfect. So those who play chess might find some of these terminologies very interesting. And if there is any correlation about the real life chess moves, please try to share it from your experience. Now, there could be a friendly merger offer. Let's suppose Boat wants to acquire JBL. Let's suppose Boat wants to acquire JBL. Boat reaches out to JBL and asks to the management of JBL, let's merge together. They go to management of JBL, and what do they ask? Let's merge together. Manager or management of JBL rejects the offer. What Boat plans is to go to the people who is above management. Who is above management? Who overlooks management? Board of directors. Very good. Board of directors are basically representative of shareholders. So board goes to board of directors after getting rejected from management. Board of directors. Now, the process, this strategy, if getting rejected by management and going to board of directors, is called bear hug. Bear hug. Please focus, guys. This is going to be very interesting from here onwards. This is going to be called as bear hug. Let's suppose board of directors also rejects the offer. Then what can board do? What could founders of board do? Who is above board of directors? Who is above board of directors? Who selects board of directors? MD is part of board. The shareholders, the owners of the company. So if rejected, if bear hug is unsuccessful, what option does board have to go to the shareholder and ask them to sell their shares, to offload their shares to boat at a premium price. Boat will offer a premium price and ask shareholders to sell their shares to boat. This offer is called a tender offer. This offer is called a tender offer. Now, to make major changes in JBL, boat wants to get acquiring stakes. Let's suppose 15% of shareholders have sold their stakes to boat. I'm repeating again. Boat will go to the shareholders and they will give an offer to shareholders to sell their shares. That offer would be called as tender offer. Now, to control the JBL, to control this company, that is JBL, boat will need acquiring stakes. Not all shareholders sold their stakes to boat. 15% of the shareholders were found the offer very attractive. 15% of the shareholders found the offer very attractive and offload their shares to boat. It means that boat percent 15% of the shares. Now boat has 15% representation in the board of director. In the board. Basically 15% representation in the board. Now, what this 15% of people, mainly 2-3 people in the board will do, they would try to instigate a proxy battle. And try to implant shareholder activism. They will try to convince other members of the board to mandate management to approve the acquisition request of JBL. And when shareholders revolt against management, it is called shareholder activism. Okay. How could this proxy battle and shareholder activism could be implemented in practical sense? First strategy is poison pill. First strategy is poison pill. In this strategy, the current shareholders will be offered very attractive price or a premium price compared to current market price to sell their shares. Now, although this is not the official reason, but why this strategy might have been called as poison pill is because something is worth 90 rupees, and due to some sort of revenge or ego, you are buying it for 190 rupees at a premium price. It means that you're swallowing a poison for yourself. That is the reason why the name could be poison pill. This is the way I remember this. You can make your own perception about it. Now, if this is the move by acquirer, target has a defense strategy called as poison put, where remember we discussed something as callable bonds. What was the unique feature of callable bond? That it can be called back by the issuer. Now, if there is a hostile takeover attempt by the acquirer, the company could call back their bonds okay, okay, just a second, guys. Yes, poison put now. Okay. Yes, what was putable bonds? What was putable bonds? In case of callable bonds, the issuer had the right, correct? In case of putable bond, who had the right to put back the bond? The investor has the right to put back the bond. Let's suppose this company, JBL, has invested in the bonds of many different companies. So what they would do, they would put back the bond and take money back from the bond investment, basically liquidating their bond investment, take money back from these people. Those basically, if they have purchased their bonds, they have given them loan, they will put back the bond and take back the money. Because why? They will need the money to fight against the acquirer. Why the strategy poison put? Because how I think is, you are putting the poison to your bond, to your issuers. You are putting the poison to your issuers. You are asking for the immediate payment of the. You are asking for the immediate payment of your debt. The issuer might have planned few things, few projects, and when you are asking your money back, it could put your issuers into trouble. Issuers are those people whose bond you have purchased. So using the putable feature of the bond, it's the strategy is poison put. Another thing could be, did you say this is true? This is through last lesson. Yes, cash equities. We have discussed callable bonds and puttable bonds in cash equities. Then there is leveraged recapitalization, where company may take extensive leverage to buy back their own shares. Company may take extensive leverage to buy back their own shares. Now, let's suppose boat was going to acquire JBL. And the reason why boat was to acquire JBL, because JBL has a product segment in power bank. What JBL can do to stop this acquisition from boat is sell this power bank vertical to a different third party. The only interest of boat to acquire JBL was the power bank vertical. JBL, what he does is sell this power bank vertical to a third party, maybe to different company of the same promoter. This strategy is called crown jewel defense. Crown jewel defense. The crown is passed on to a third party. The jewel of the crown is passed on to the third party, and hence we have defended ourselves. The next one is very interesting. The next strategy is Pac-Man defense. Where the acquirer is given an offer by a target to get acquired. Very interesting. It means that boat instigated to acquire JBL. JBL threw a counter offer to the shareholders of boat to acquire boat. This is called Pac-Man defense. Next, Pac-Man defense. Let's suppose SK you had a company and Arjun wanted to acquire your company. Instead of he acquiring your company, you gave a counter offer to him. Okay, this one, leverage recapitalization. Do you need this one, SK? Okay. So large debt will be taken to buy back our own shares, to buy back the shares of our own company. That is leverage recapitalization. After that, we discuss crown jewel defense, where the jewel of the crown will be passed on to the third party. Okay, SK, the most important vertical for which the acquirer was interested in the target, that will be passed on to the third party. Shall we move ahead, SK? White knight. Can it be sold to acquirer company? No, if it would be sold to acquirer company, then how could it would be a defense from the acquiring company? It can't be sold. It can be sold to acquiring company if nothing is happened, but that won't be a part of crown jewel defense. It would be sold to third party so that acquirer does not acquire the target company. That is the idea over here. White knight. A third party and more specifically, a friendly third party comes to rescue the target. What do we mean by that? Adani acquired, set an open offer to acquire NDTV. NDTV is friend with Tata Group. Tata Group, being a loyal friend, came to rescue NDTV by giving an offer higher than the offer what Adani gave. Adani gave an offer to NDTV shareholder to sell the stakes for, let's say, 900 rupees. Tata Group came and rescue NDTV by asking for 1100. Since this is a friendly third party, it is trying to rescue NDTV. And finally, the last strategy is white square, where let's suppose JBL had 100,000 shares outstanding. Out of that, Boat was trying to acquire that, but out of that, 20,000 is being acquired by a friend. Although, let's say that friend is Sony. Although this is a minority stake, it is a 20% stake in the company. It is a 20% stake in JBL. Although it is a minority stake, still this stake is very influential. This stake is very, very, very influential. So without the approval of 20%, or let's say 35%, stakes has been acquired, a minority stakes, but still very influential. Without the approval of this 35% of shareholders, some of the decision needs super majority votes. Super majority votes, that is votes more than 66.66%. Some cases more than 75% votes. More than 2/3 or 3/4 of votes. If a minor part or the more influential part is acquired by a neutral third party, even though the acquisition is successful, both won't be able to destroy JBL. Why? Because a neutral third party, a friendly third party, won't allow decisions at the cost of other shareholders. So what board could do after acquiring JBL? They could say that JBL stop working on headphones, stop making headphones. There could be a policy that this needs super majority votes, more than 75%. Sony won't approve this, and both won't be able to make any strategic decisions that cost other shareholders. So with this, we are done with the strategies of mergers and acquisition. I hope you enjoyed the class, guys. This file. Okay. Merger and acquisition. Thank you, Arjun. Thanks a lot. Thanks a lot for your such a wonderful feedback. Thanks for all your love. It was Yes, today is last session for batch 0224. I hope you guys excel in your career ahead. I'm really going to miss all of you guys. It was a great time enjoying sharing knowledge and getting knowledge from your end. Although that is for 0224, you will be having your mock exams from now on. Sorry, not mock exams, but exams from now. After 15 to 20 days, you will receive a mail about it. Just give me a second, GA. Not holiday, you will have to prepare, guys. There is no holiday, guys. So, RK is asking for till then there is holiday for us. No, there is no holiday for anyone. For 0224, you have some good 15 days. Please revise all the concepts that has happened in past so that you can revise the curriculum. Use this time for your own benefit. Yes, the PDFs will be uploaded on the, yes, Prajwal, the PDFs will be uploaded on the LMS. For few parts, it is expected to make your own notes as well. So SK, for that, you will have to raise a ticket, ask a doubt. Through that, we can connect for one-on-one. Okay, guys, thank you. Thanks a lot. It was really a great session, a great time enjoyed with 0224. So bye-bye, take care, have fun. Yes, yes, please tell me if you have any doubt. Bye-bye, bye-bye. Thank you, guys. Uh, Tell that you have any doubt regarding the curriculum and they will connect you with me. Power BI and Tableau, for those you will have to connect to the, raise the ticket, the team will get in touch with you. No, there would be 6 days of exam, 6 days of subjective papers, 6 days of objective papers. Okay. Thank you. Bye bye. Have fun. Yes, for making dashboards, for interactive dashboards, although it also depends on the, to be very honest, I'm not well versed with Power BI. I've never used Power BI. I don't know anything about Power BI RS. So it depends on the job role that you are going for. If it is a financial modeling job role and Power BI is something that is mentioned in the JD, then it would be used. Otherwise, there is no such compulsion. Try it on your own, PJ. Try it on your own. It is very similar to what we have made in our models, so you will be able to figure it out on your own. If not, you can go through the recorded sessions as well. Bye bye, guys. That's it from my side. Thank you. Thank you. Bye. I have a different session as well. So see you guys. Bye bye.